making sure that the clients know that we have a human in the loop throughout the entirety of the journey. And that's in the early stages. I think when we get to a point where we have tens of thousands of rows of data that indicate a certain level of accuracy and success, we may be able to go forth and say, this is the comfort level that we have with this particular task, transaction, or activity, and ensure that they have the risk appetite to move forward with that.
Welcome to 5 Minutes, your quick dive into the wide-ranging world of insurance, technology, and leadership. I'm Miguel Edwards, and I'll be your guide as we explore these topics that are transforming not just the insurance industry, but the business world at large. Along with sharing observations I've made over the span of my career in insurance, technology, and operations, I'll be chatting with some of the brightest minds in business and leadership. Whether you're a seasoned executive or a rising star, an industry expert, or just curious about how technology is revolutionizing insurance, this is your perfect spot for your weekly dose of insights. This is 5 Minutes. Erin, thank you so much for joining us. So glad you can join us here for another episode of 5 Minutes, and welcome.
Thank you. It's great to be here.
Let's dive right in. And I guess, the first place I want to start is, given your career and your background, I mean, what would you say is really kind of shaping the vision and, in terms of you and the rest of the co-founders there at Elysian, what is shaping the vision for what you view as the future of service and claims processing within insurance?
Sure. It's a good question. And I think the reason that I'm able to answer that is because I started out my career right out of undergrad, going right into the insurance industry. I was a claim adjuster myself. I've worked for large organizations, large national insurance carriers. I've worked for TPAs. This is actually my second startup. And over the course of maybe the last 15 or 16 years, I've been exposed to probably the majority of claim management systems that are out there, the majority of technology that's been implemented, and it all seems to lack in two key areas. One is that a lot of the systems they're trying to advance certain systems by bolting on pieces of technology to try to enhance it, but unfortunately the underlying legacy technology is not built to be able to support and sustain this bolt-on technology. The other piece is that a lot of the claim technology seems to have missed a key factor when it's being built, which is having conversations with the people that are most often interacting with that system, which is the claim adjuster, right? So you see a lot of claim management systems and a lot of claim technology out there that's great for underwriting. It's great for, obviously the customer. You want to have the customer to have a portal, have a great experience. It's great for risk management. But unfortunately, there are times when the claim adjuster, the one who arguably is interfacing with that system most, is not part of the conversation. So I think one of the key elements that our co-founders and the executive team have really invested in is making sure that the appropriate parties are at the table, and the claim adjusting team is part of that. They have the most valuable feedback to share. They've been interacting with the technology, managing the claims, managing all of the processes for decades, and they have been instrumental in kind of crafting the technology and the processes that we're putting together here at Elysian.
Yeah, I love that. Erin, you're speaking my language. I've got a client and we're going through a very kind of similar thought process around building solutions that really meet the needs of the user, the internal users. And we use a framework called Jobs to be Done, which is kind of a framework that is used well outside of insurance, more around user experience. And it's so funny because you talked about the fact that typically systems are built by basically trying to take screenshots and process flows that are often system built. They're like those processes are built around system constraints and simply modernizing them in a new tech stack rather than re-envisioning the entire experience for the user, right? I mean,
absolutely.
That is that kind of the model that you guys are thinking about?
Yes. And the thing that was exciting about joining Elysian was when I was just prior to onboarding kind of asking, what is the vision? What is this going to look like? What are you trying to build? And it really was largely bringing in the best talent and expertise in the industry, both on the claim side. So you have the claim subject matter expertise, industry veterans, and you have fantastic tech, product and engineering personnel that are coming in. And it was reimagining how all of this is done. And when we think about other TPAs or other carriers that are out there, it wasn't necessarily this value proposition about doing it better. It was about doing it differently. Let's think about doing something differently. Let's build our own proprietary technology. Let's really look at the processes and figure out, is this something that we want to reinvent? Where can we leverage technology to make this job meaningful to adjusters again? One of the challenges that we've seen a lot is that we've had a mass exodus of talent, not only in the insurance industry, but particularly in the claim adjusting realm, because it's a really challenging job, and it's as of late become very bogged down in the minutia and the administrative tasks and activities. And how can you get folks excited about wanting to join an industry and join a career or stay in a career where the things that you feel add the most value, like making coverage decisions, negotiating, providing excellent customer service, your capacity is so limited that you can't do those things. You are effectively not a claim adjuster. You become a firefighter. And that's not what we're trying to continue to provide.
No, I love that. You mentioned in your comment that using technology is core to this concept. And to what extent, Erin, do you think that you have a unique advantage or a unique opportunity, given where we are with technology now, to really truly embrace that versus 10 years ago? It feels like there's been a bit of a democratization, if you will, of technology and capabilities, right?
Absolutely. So I'd say, kind of going back to, we're not bolting on solutions to legacy systems. So we have a proprietary tech stack that we're able to kind of incorporate the AI enhancements and features. And we're not just trying to take, the manual process that exists today and digitize it. We are truly trying to transform the entire process by leveraging AI for a couple of things. Well, let me just say this, changing the process in a couple of ways. One is identifying every single task and activity that can occur on any given claim file. And we've gone through that exercise. There are many. And identifying the right resource to actually transact that particular task or activity. Should it be the adjuster? Could it be outsourced to another resource, or could it be handled or managed by AI? So we kind of approach it that way. And if it is something that can be managed by AI, or AI could contribute in some meaningful way, it can automate certain tasks and activities. But the thing that I get most excited about is that it can provide decision support throughout the entire process. So if you think about a claim management system, you're an adjuster, you come and log in, you're typically handling a pending, you have a diary system. With our technology, the ultimate goal is that you have our claim conductor operating and serving as a co-pilot. So it is doing the things that we feel we're comfortable with it transacting, but it's also providing the adjuster with decision support along the entire life cycle of the claim. If there's enough information that warrants a coverage decision, it will say, hey, adjuster, we recommend X to, you take this particular next step. And if there is a reserve inadequacy that is identified, it will prompt the adjuster and so forth. So the adjuster doesn't have to maintain all of these different pieces of information in their head and think about all of the different logistical things that need to happen on a file and the regulatory concerns on a file. But at the end of the day, the adjuster is the one that's making the decisions in the final call, because AI isn't about replacing the adjuster. It's about replacing the minutia and some of those administrative tasks, but it's about augmenting the adjuster's ability to do the job and maintain they maintain full control of the file.
That's fascinating. In the pre-show, I was telling you, Erin, about a webinar that we just did yesterday, and the topic of that of that webinar was AI compliance. And one of the things that the chief compliance officer we were talking to, Ron Hamilton, he explained that that carriers need to make sure that they're treating risks around AI the same, whether it's internal or third party tooling. What are you guys doing? What are you seeing as kind of the trends to be able to, for your clients, talk through the use of AI so that they have that comfort level, since they own the compliance risk associated with it? What are you guys doing to kind of to share, whether it's explainability, whether it's model governance? Like, how are you guys getting your clients comfortable?
So I would say In the early stages, it's largely about having human validation on nearly in nearly every step of the journey. I don't think that any of us would be comfortable having AI make decisions, certainly when it comes to making coverage decisions, issuing payments, things of that nature. But making sure that the clients know that we have a human in the loop throughout the entirety of the journey. And that's in the early stages. I think when we get to a point where we have tens of thousands of rows of data that indicate a certain level of accuracy and success, we may be able to go forth and say, this is the comfort level that we have with this particular task, transaction, or activity, and ensure that they have the risk appetite to move forward with that. But in the near term, anything that we feel could be anything that we do not have a high level of confidence in its accuracy or consistency, it's being validated by a human in the loop, and we're getting good responses to that. So long as that's something that is a short-term solution, and over time, as confidence grows, AI can manage more of the process.
Shifting gears on you here a little bit, you know, I imagine that, you know, there are a number of carriers that may be watching this and curious as to, you know, what are the metrics, the KPIs that one of your clients would want to look at that helps them measure the ROI, the value proposition of leveraging a service like yours, and then obviously how are you going to stand out with other, you know, potential service offerings? So what are the kind of KPIs that you're sharing and celebrating with your clients?
Definitely. And there's several. So first I would start with cycle times. So if we have the ability to leverage the right resources and technology to automate certain pieces, provide critical decision support, reduce the burden and the administrative burden on the adjuster's desk, we will see a decrease in the amount of time that it takes to get a claim from first notice of loss report ultimately to resolution. And we all know that the minute or hour or day that a claim stays open, the more expensive it gets. So a closed claim or a resolved claim is a good thing. So cycle times is a big piece. The other piece, I think, is especially in the TPA world, where you can tend in some of the traditional organizations to have a little bit of a revolving door of talent. You know, people go from place to place and they have other opportunities. Consistency in the results, right? So you're seeing consistent coverage decisioning, you're seeing consistent quality, you're seeing consistent output. That's something that we stand to benefit from, not only because AI is in the loop, but also we're cultivating a culture at Elysian that makes adjusters want to stay because they're actually feeling like they're adding value and they're part of this journey and process. I would say in the future, there will be benefits by way of cost mitigation. So AI is very good at picking up on things like potentially duplicative payments, or maybe failure to recognize a subrogation opportunity, or failure to identify the ability to assess liability on another party that was involved in a loss. And when in the claim management system that we operate out of, think of it as having kind of a real-time QA that's happening at all times. The technology is actually auditing the work that's being done on the file and being able to call out in real time, this is a missed opportunity, this is a potential error, this is a potential mistake. And those are all real-time benefits that the client will be able to realize because we have someone kind of catching those things in addition to the adjuster. So those would be the key bits. And then ultimately, once we're providing more end-to-end claim management for first-party claims, it will drive down to Net Promoter Score. So how are the customers actually responding to the service that we're being able to provide, and the results that we're delivering?
I think about where you guys sit in the value chain and the unique opportunity you guys have to aggregate claim data across a number of customers, across a number of products, et cetera. What kind of value do you guys see in there? What kind of value do you anticipate using that kind of data for to help your clients, whether it's with even just with their products themselves or with just the overall claims experience?
Absolutely. When we're working with clients and we're able to ingest a significant amount of data through the reporting of first notice of loss, or if we're receiving any kind of run-in claim information, the technology that we use is able to ingest and contextualize entire books and entire portfolios of claims. So there's some pretty interesting pieces of information that we can report back, particularly as the data scales. One, as you referenced, it could be the profitability, or at least kind of the ultimate payment that is associated with the products that they're selling. We are able to identify different we're able to kind of articulate the performance of particular agencies that they might be doing business with, as well as the adjusters on their staff. I think over time, we'll be able to ingest more information to be able to help inform their underwriting decisions. If you think about maybe a property book of business, for instance, if there's a particular location where things are more expensive, or the risk seems like it's greater, I think in addition to that, we can also provide some interesting data and analytics around the vendors that they may be partnering with, because as a TPA, while we have our own kind of network of preferred best-in-class vendors, we also will accommodate any client request. If they have preferred vendor listing, of course, we're going to accommodate that. However, when you have data and results at scale, we may be able to identify that one particular provider, one particular vendor may not be adding the value that they may think that they're adding. So that's another area of opportunity as well.
Love that. No, that makes a ton of sense. I don't know if you would agree with applying the term disruptor to kind of what it is that you guys are doing, but I'm just curious, are you seeing kind of, or are you sensing a kind of a response from your competitors, or are you sensing concern that you guys are bringing a different flavor to the table that they may not be able to keep up with?
So I think that at this point in time that you have competitors that are definitely watching closely. We are establishing more of a presence on podcasts like this and at different conferences, and moving forward with different clients. So I definitely anticipate that will continue to happen. And what we have that's working to our benefit is our size, because we're not committed to a lot of these legacy systems or legacy processes, and a lot of the red tape. And a lot of organizations, it felt like it took an act of Congress to get something that was kind of small approved. And to our benefit, we're a smaller organization, we're nimble, we're a startup, and we're able to move quickly, and we make data-driven decisions. So I definitely think we're a player to watch. And I'm certainly not going to predict the future, but I'm sure that there may be conversations at a certain point in time where there's interest in some of the proprietary technology that we're building, and maybe further discussions even beyond that. So all very exciting things. It's a cool place to be.
No, 100%. I want to, it's funny because I was having a conversation with somebody today. We're working actually on our own marketing messaging, because I'm feeling like there's some challenges that in our messaging that I want to address. And I want to make a statement and then ask you to kind of react to it and maybe think about whether it applies to Elysian. And it's that, the term modernization and the term futurization, it just doesn't work anymore. Because for me, it suggests that there's an activity that you take, which then you arrive at a point and then you're good. And now what I'm feeling like with the way technology is evolving, I mean, for example, I'm a student of AI, and I don't know if it's my age or what, but I'm having a hard time keeping up.
Right.
And so I'm now thinking about instead this term of just kind of entering this perpetual evolutionary mindset where you are never going to sit still. Your technology, your processes, your people have to instead adopt a mindset that this is what we're doing for like the next 18 months, and then it will change. And we'll be lucky if we get 18 months out of it, because there will be a new, better, faster, cheaper way to do this. And we've got to be able to adopt it. Otherwise, there will be a new Elysian that's going to come and eat our lunch if we're not careful.
Absolutely.
React to that and tell me how that fits into what you guys think about.
I couldn't agree with you more, because I think about what are the things that keep me up at night, right? So, right now, it's not the day-to-day client onboarding or the day-to-day claim handling and the processing. Those things I feel like we have a pretty solid handle on. We have good processes, we have good people, we have good technology, and we're all working really well together. But what keeps me up at night is what I define as my North Star today. And when we reach that North Star place where you have a fully functional claim management tech stack, that you have Claim Conductor serving as a co-pilot, the adjuster is operating with autonomy and doing the things that really adds value. We have really happy clients. once we hit that spot, we're already a few steps behind if we're not thinking about the next North Star, right? So
That's right.
my North Star today will not be my North Star tomorrow, and it will not be the North Star beyond that. So I couldn't agree with you more.
Yeah, 100%. And it's going to be a true struggle. And as you mentioned before, especially for the legacy players that are anchored, they're currently anchored. They've got fully depreciated systems that, and they're based, their EBITDA is based off of a fully depreciated asset. And now all of a sudden they've got to dump tons of money into this to even try to get to a place of nimbleness, which is really fascinating. Is there, along those lines, I mean, as you look at your roadmap, is there anything that you can share that, in terms of where you think things are going in either just claims world in general or TPA world? Like give us, anything on your roadmap that you see?
I think what I would be able to speak to is our talent strategy going forward, because I think over the last couple of decades, and there remains a tremendous amount of value in industry veterans and people who have decades and decades and decades of claim handling experience, adjusting experience, regulatory compliance experience. All of those things are vastly important. But we need to be honest with ourselves. I consider myself one of these folks that I'm not on TikTok. I'm not on a lot of these new apps. I'm kind of anchored to LinkedIn. I'm anchored to Facebook. So when we're strategizing about how we're going to continue to innovate and be kind of leading this charge, I think we just need to be really honest about the fact that we need to continue to bring in new talent across the spectrum that can challenge our way of thinking, coming in from different industries and not necessarily marrying ourselves to what sometimes can happen, which is looking for a certain profile, particularly in claims, that you have this potential pedigree, this background, this experience, really broadening what that candidate profile is based on what the future is going to look like.
It's funny because you talk about the talent, and one of the things that strikes me, Erin, and it's a really kind of fascinating, perhaps a unique space, is that we're right now in a place where we have 4 distinct generations in the buying market at the same time. Yeah. And the generations couldn't be, any more diverse in terms of their preferences. Now that the Gen Zers are now buyers of insurance, it's really fascinating. What do you think, and how do you have advice for players in the market since you guys are so close to the customer? How do you deal with such varying dynamics in the persona base that you're serving?
It's a great question. And I think ultimately it comes down to we aren't able to boil the ocean. So we have to be really good at prioritizing, and based on what is in our pipeline and what is the market sizing out there of the portion of the market that we're seeking to go after and serve.
Right.
What are the channels with which they seek to communicate? What do they value? Is it price? Is it convenience? Is it service? And at the end of the day, we may get to a point where AI technology and the best in class talent can be out there servicing all needs for all people. But in the interim, when we do, just like anybody else, have a certain threshold of capacity, a certain threshold of capability, we're just going to need to prioritize really effectively to make sure that we are hitting the things that value most to the majority of people we're trying to service.
Yeah, no, that makes a ton of sense. You've got to focus somewhere. I got a tough question, and this one, it's one that just pains me on a regular basis because I spend too much time reading the news.
Okay,
and our industry is getting the snot beat out of it, especially in the wake of all the cat in California, and then obviously there's news. I live in Florida, so there's news coming out every day about how all these claims are being closed with no payment, and there's all these complaints being filed in a DOI. With you guys so close really to the delivery of the promise, what advice, what role do you think that that we all have, and particularly you or just the industry at large, have in changing this narrative so that the consumer, the people who buy our products, really understand what our job is to do, and how do we change this paradigm so we're not the bad guys?
It's a good question. It's a question that I've challenged myself to answer many a time. And I think we need to do a better job about educating people about what it is that they're buying. I've spent a lot of time working in commercial auto, personal property, homeowner space. And, even in conversations with my parents, they've paid premium for 30 years. So if something happens
Right.
to their roof, they expect that that's going to be something that's covered by insurance. And it's a reasonable argument. You've been making your payments on time for 30 years. But what we need to make sure people understand is that, particularly in that example, a homeowner's policy, it's not a maintenance policy. And if you had purchased a maintenance policy, you would have been spending a lot more money over all those 30 years. It's really to protect you from catastrophic events and educating people about what it is that they've actually purchased. The other thing I think we need to shed more light on is the abuse of the system, the abuse of claims where there is either really flagrant hard fraud that's taking place or kind of the soft fraud of the padding of claims, how there are third parties that are incentivized to get involved in a claim. If you think about certain assignment of benefits contractors or plaintiff attorneys, and those types of things, they impact the consumer in a very real way. The premiums go up as a result of those things. Absolutely. And so if you're paying more in premium and you don't fully understand what you're paying for, and then something happens that you believe that you are owed some kind of compensation for, I just think shedding a little bit more light on some of the players out there that are taking advantage of the system, some controls to try to limit or mitigate that, and whatever we can do to educate, particularly like people like you and myself. We're maybe not going to reach everybody in the world, but educate the people around us, and word can travel, I guess.
Yeah. My favorite is, I don't know if you know, Curtis Goldsboro, Loss Ratio. He's out there on LinkedIn, and he does these amazing videos. And he put this one video together. He stole something off of TikTok, and it's this woman who's looking at her app, and she goes, I just got into a car accident and won $75,000. And it's like and that was the actual vernacular. I won $75,000. Like almost, it's like hitting the lottery, right?
Yes.
It's fantastic. But we are seeing progress though. I don't know if you follow, but here in Florida, a couple of years ago, they passed some legislation. So assignment of benefits is gone, and their one-way attorney fees gone. And so like those types of things are being adjusted. And now I think we're starting finally to look at the public adjuster market and kind of how all that works. And so we're actually, a report came out, and we're actually starting to see premiums come down just a little bit now as a result, just a little bit. And we were just recently surpassed by Oklahoma as the highest homeowner premium because of all their hailstorms. Okay. So, so fascinating.
I spent some time in Florida myself at two of their Florida domestic carriers. And one of the other points that was interesting was, so often the lawsuit would be filed on a claim that went unpaid, and the constant conversation was, it is cheaper to pay this X dollar amount settlement than to go forward and defend it. And that would just be another thing that I would suggest we educate folks on, that unfortunately the reality is it's cheaper to pay the $30,000 settlement request than to actually move forward and defend a claim that ultimately wasn't covered by the policy. So.
Yeah, no, that's exactly right. That's exactly right. Erin, thank you so much for taking this time with me. This has been a really amazing conversation. Congratulations to you, obviously in your career and for everything you guys are building at Elysian. And I'm going to be watching. I can't wait to see how you guys are going to completely reshape claims in our market. And thank you to our audience for joining us for another episode of 5 Minutes. And can't wait for you guys to join us back for our next episode. See you soon. Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on, and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.